as Nico said, founder of TFTC, co-host of Rabbit Hole Recap, but I'm also a managing partner at 1031, and that is what I'm here to talk about today, investing on a Bitcoin standard. I think this is a framework that everybody should understand, and I'm going to do what President Trump does. I'm going to try and do it well, but don't hold me to a standard. I'm going to try and weave investing on a Bitcoin standard. I'm going to jump context because I think it's important. We're doing this at 1031. We operate on a Bitcoin standard, so I'm going to talk about our view on the market and how we approach investing, but then I'm also going to context switch and say how that can be applied to other investors. And to start, you have to start with the traditional investment model, and we'll use venture capital as an example. Historically, up to this point, it's get equity stakes in companies, acquire ownership interest in businesses that benefit from their growth and success, and then tell those companies you need to grow at all costs. Focus on rapidly expanding your business, get your head count up. There's some vanity metrics, strive for these, and you don't need to be profitable immediately. Just get growth, get distribution, get exposure, worry about revenue and profit later. And then bank on markups from VCs. Venture capitalists have very deep networks. They say, go get some distribution, get some product market fit, and then don't worry, our VC friends that are later stage funds will come and invest in you and then mark up our investments. And then ultimately, we need you to go public or get acquired. And so along the way, we're going to figure out an exit strategy. You either IPO or get bought by an incumbent tech or finance company. And this was explained very well in Silicon Valley. This was supposed to be a GIF, but this is a PDF. This was the model. No revenue. No one wants to see revenue. And we believe this is a manifestation of ZIRP, zero interest rate policy, QE. There's so much money flooding the system that it is easy to just spray and pray, put money into a bunch of companies and not really worry about the core of those businesses and whether or not they're actually profitable. So you can see here on this chart, it's interesting, the flows of capital lag the interest rate a little bit. And so I think what's happening right now is the world is coming to realize that what happened post-COVID 2020, 2021 is not good. A bunch of funds raised a ton of money, threw it at a bunch of companies. And that's actually a big problem in the venture capital market specifically right now, is there was a ton of money deployed in those years. And what the market is coming to find out is the companies that got that money aren't actually profitable. And as interest rates go back up, it becomes harder to make money. And so that is why I think investors broadly need to shift their mindset to investing on a Bitcoin standard and having Bitcoin as their hurdle rate. And so this is just a chart of the price growth in Bitcoin throughout its history on a logarithmic scale. And so this is your hurdle rate, this growth of Bitcoin. You need to be able to deploy capital as a fund, as a company, as an individual that is going to outpace the growth of Bitcoin's purchasing power over time. And not only that, not only is Bitcoin your hurdle rate, but I think really what we drive home to our portfolio companies, it's not only your hurdle rate, it's also the fourth lever to equity value. So historically, you have company growth, you have net cash flow, you have change of multiple, but holding Bitcoin on the balance sheet is a powerful tool. It allows you to, if you allocate capital correctly and you do it in a risk-adjusted way, you raise a round, you put a little bit of money into Bitcoin, and you let that sit on your balance sheet as you build out your product and get it to market over time. Historically, that should increase in value, and this is a really powerful tool to have as a company. It allows you to extend your runway and be very opportunistic when it comes to raising more equity or going to raise a round to give up more equity, raise debt. If you have that Bitcoin piece, it allows you to extend that and it gives you a bit more leverage. And so investing on a Bitcoin standard, how does that change things? First bullet's sort of the same. You get an equity stake in a company. and hope that that company grows, but you push revenue and profit as early as possible because that Bitcoin hurdle rate is always there. The clock is ticking, blocks are being produced. Every 10 minutes, people are independently coming to the conclusion that Bitcoin is something they want to hold. So as more people adopt it, that price is going to continue to go up. And you as a company better be providing a good and a service that the market deems valuable and is actually providing you revenue, which is a crazy thought these days. So the idea that you should actually build something that people want, they pay you for it, and then they pay you more than it costs you to make. It's a very simple concept, but this has been lost for many decades. So think about profit now, because that enables you to stack more Bitcoin and to keep up with that increase in purchasing power that Bitcoin is exerting as more people are adopting it. And then bank on creating sustainable enterprise value for your company instead of banking on the next raise. How are you profitable? Are you stacking Bitcoin? Is the equity value of your company going up because you're accumulating Bitcoin, because you're providing a good that people actually want? And this creates optionality on the back end in the incumbent VC model. It's like go public, get acquired. Those are typically the ways in which companies will monetize. But on a Bitcoin standard, we've seen it. There's many profitable businesses that have the luxury to stay private if they want to. They could also go public or get acquired. And many people may be asking, well, how does that work for you as a fund if they're staying private? And there's multiple ways that we can benefit from that. We see it already in our portfolio. Some companies that are profitable pay a dividend. And then you also have the opportunity of a permanent capital partner coming in and buying you out. So there's a ton of funds that take the Warren Buffett model and they say, I just want to buy an equity stake in a cash producing company. And so I'll buy a stake in that. And that's how you can buy out early investors. Investing in a Bitcoin standard, on the left side of the chart here, you'll see it really revolves around scarce money. Bitcoin's scarce, so you need to be racing to provide a good service so that you can acquire as much Bitcoin, which leads to sats flow. We really push that with portfolio companies, as you need to be producing sats flow as quickly as possible and do that by producing value at minimum cost. And so what we see in the portfolio is the best performing companies typically have their headcount very low and they're thinking about this Bitcoin hurdle rate every day. Jack Mallers at Shrike has been very public about this when he's investing money, whether that's to do marketing or to expand into new product lines. He's thinking, can I outperform Bitcoin's hurdle rate of 65%? In reality, this is hard to do. And I think this goes back to the investment side. One thing investing on a Bitcoin standard is really going to bring back is proper due diligence. This era of ZERP and easy money has made it so funds and investors haven't had to really do diligence on individual companies. They get the money in, they spray and pray, and they hope maybe 1 out of 10 or 1 out of 20 of these companies will hit unicorn status, and we'll make our nut on that. In reality, investing under a Bitcoin standard is really hard because you can have massive blowups. You have to know what you're doing. And the examples we have here, FTX and BlockFi, they were the darlings of the industry for many years, and you were an idiot if you missed out on those companies for a period of time when their valuations were in the billions. And I would juxtapose that to our investments in Unchained, particularly BlockFi. People were laughing at us when BlockFi was running up to a $4 billion market cap and saying, oh, you missed that boat. And it was like, well, we actually did our diligence. We understood BlockFi's risk management system on the back end. They were taking their customers' Bitcoin and then lending it out to traders who were trying to get a yield on that. But ultimately, as we know, there is no lender of last resort in Bitcoin. And the thought of taking people's Bitcoin and hoping that you can make a yield on that via trading altcoins seems a bit risky to us. And so we decided to invest in a company like Unchained instead. And Buck was just up here explaining their multi-sig model. And when it comes to comparing Unchained's lending desk to BlockFi's, it was obvious to us that that was the superior product. And that's because we did our diligence. We understood the products. And so the point here is investing under a Bitcoin standard, we're going to get away from this idea that you can just spray and pray and hope that you don't blow up. You actually have to do the hard work of diving into the details of a business and making sure that it's investable. Many people are confused, despite the fact that Bitcoin is 60% of the market cap of all cryptocurrencies. The amount of capital that has been focused on investing in Bitcoin companies is a pittance. We're talking about like 100 to 1 more dollars invested in broader crypto versus Bitcoin only companies. And this is, I believe, a manifestation of ZERP and easy money policies, this drive to be able to deploy capital and then quickly return capital by dumping altcoins on retail has sort of been the model. But I think this is starting to change, particularly with the interest rates going up and what we're seeing with Ethereum and the meme coin craze. Sort of the marginal return on that type of investing is diminishing rapidly, I believe, in front of our eyes. And so we think at 1031, our focus on Bitcoin and companies building out infrastructure in the Bitcoin space is our edge. We don't just view ourselves as a VC fund. A lot of our investments to date are venture focused, but the opportunity is so wide that we view ourselves as a platform, because Bitcoin is going to seep into every part of the global economy, and there's many opportunities out there. So you can see on the early end, incubation, there's going to be opportunities for growth. Obviously, we have mining, and credit is one thing that I'm particularly interested, this intersection of Bitcoin and traditional credit markets, and we'll talk about that in a little bit. So our focus is we try to partner with the best founders. Nico said, co-founder of Rabbit Hole Recap, been doing TFTC since 2017. Matt and I have developed an incredible network, getting to know everybody in the space and getting to understand Bitcoin at a technical level. And we've developed really good partnerships and friendships with the people building out the space. Timing is everything. We believe that within the Bitcoin space, there's an order of operations to how Bitcoin will succeed and what products and companies will have the most product market fit at any given point in time. That's very important when thinking about this, especially from our perspective. We want to align with the ethos of Bitcoin, and so we name our venture funds low time preference funds. We've really taken that view that we understand that this is a bit of a contrarian take, maybe not so much now, but a few years ago it was very contrarian to be Bitcoin only, and to basically understand it's going to take time and effort and hard work to make sure that these companies get out there and they're actually providing goods and services in a profitable way. Beyond that, some of our management fees, we do no strings attached grants to open source projects in the space. So we've done that with Fediment. We gave a grant to Calais at Cashew. We've supported Bitcoin Q&A on his education efforts. And then obviously we need to steward LP capital. This is something that is very near and dear to our hearts. There are people that are backing us. They've done incredible things in their lives to make money, and it is our job to steward that capital. And again, I think this is a big juxtaposition to the incumbent investment landscape, which is just raise as much money as possible, spray and pray, and we'll get bailed out by the money printer. I think that time is ending, and any LP that's allocating capital needs to understand that Bitcoin is the hurdle rate, and you need to basically realize that we're going through this transition period where the ability to just get a unicorn in a portfolio of 100 is not going to return that much capital. And then lead by example. You can just do things. And so going back to this slide, and this slide particularly, this imbalance of capital, it blew Matt and I's minds when we first saw charts like these a few years ago, because we've been doing the show and we've been talking to all these amazing founders, looking at all these amazing products, and it blew our minds that there was not capital partners out there that wanted to support these companies. And so we decided to join 1031 in 2021 and go make sure that these founders and these companies had the money to build up the infrastructure that we believe is going to be critically vital to the future of humanity. Weaving here, this is going to expand beyond the Bitcoin industry. So what I just said there, our sort of mindset to approaching investing in companies in the portfolio, it's not going to stay in this industry for much longer. It's going to expand, and you're going to have to think about this when you're building any type of company, not just a company creating multi-sig wallets, security, hardware, mining infrastructure. This is going to apply to your local mom and pop shop, your insurance company, whatever it may be. And so bringing this mindset to businesses outside of Bitcoin, I think, is going to be very important. So looking ahead, this has been a big conversation in the industry over the last few months. Is people aren't spending enough Bitcoin. The financial TradFi's here, the financialization of Bitcoin is going to ruin and corrupt the ethos and essentially co-opt the network. I don't really think that's the case, and I think both are happening at the same time. Excuse me. And Bitcoin adoption is going to happen this way. You're going to attack it from both sides. I think the financialization of Bitcoin as a meme is the wrong framing. Michael Goldstein taught us in 2019, framing is important. It's not the financialization of Bitcoin, it's the Bitcoinization of finance. And I think this is a massive opportunity that people really need to get comfortable with. Guy Swan was up here earlier saying that Bitcoin collateralized credit products are incredible. And they are. And I think if you're thinking about how can we actually get to the other side of a Bitcoin standard without the mandibles-like situation where the world blows up and you have Mad Max and the Bitcoiners are okay because we stacked early, that's not the future I want to see. I think the meme of a soft landing that Janet Yellen and Joe Biden and others were talking about a few years ago can actually be manifested, but not in the way that they think. I think it's by the Bitcoinization of finance. When I say that, I mean two things. There's hundreds of trillions of dollars of credit out there that needs to be refinanced with better collateral. And so I think what we're beginning to see is the introduction of Bitcoin as super collateral in the credit system. And this is incredibly optimistic. This makes me incredibly optimistic because if you look at the credit problem, you see how immense it is. It can be daunting, but slowly but surely you're having structured credit products come to market that are introducing Bitcoin as collateral. And that acts as like a pressure release valve in terms of having to depend on the other form of collateral that previously existed. So we're seeing this in commercial real estate markets with Battery, where they're introducing Bitcoin as collateral alongside a commercial real estate asset. And over the course of that 10-year loan, we like to think that the Bitcoin price is going to go up significantly. And so the Bitcoin part of the equity value of that credit should surpass the equity value of the commercial real estate that was originally underwriting. And that's very good for the borrower and the lender. And I think if you're thinking of a way to actually manufacture a soft landing, you need to begin introducing Bitcoin as collateral to create this transition. So that's on the Bitcoinization of finance, and that's the first part. The second part is what Buck was just talking about up here. I think the Bitcoinization of finance also means bringing Bitcoin's native properties to the financial world, particularly multi-sig, custody, and escrow. Right now, it's not great. You have MicroStrategy and many others, a lot of the ETFs, buying Bitcoin, giving it to Coinbase so they can secure it. But I think, I don't want to say anything like too bombastic here. We've seen it throughout Bitcoin's history. People that mishandle Bitcoin ultimately blow up. And I think, I don't know exactly what it's going to be, but I imagine we're going to have more lessons where you have a centralized custodian who mishandles Bitcoin and the market learns. And the Bitcoinization of finance on the technical side is going to begin to become demanded by the market, where it's, if I'm engaging in a Bitcoin collateralized debt product, I want to make sure it's in a multi-sig. Maybe I have a key in the quorum so that I can audit the address. Maybe it's multi-institutional, but if I'm interacting with your financial product, I need you to at least give me an address that I can look at on a block explorer and make sure that the Bitcoin's there. So that's on the top end. And I think that the opportunity there is massive. There's hundreds of trillions of dollars of debt that needs to be refinanced, and that Bitcoin can act as collateral there. The second one is on the lower end. Businesses adopting Bitcoin, companies like Zapright creating software that makes it easy to send invoices to accept Bitcoin. I think slowly but surely, as more individuals independently come to the conclusion that they want to hold Bitcoin as a store of value, as a savings technology, they're going to begin to demand that people pay them, or maybe not even demand, maybe lightly nudge them. And I think something like Zapright does this incredibly, where you offer a payment portal for somebody to pay you for your service, and you say you can pay me in fiat or you can pay me in Bitcoin. And I think we're going to see more of that, as well as governments and central banks continue to mismanage the money. And so the conversation, I think, is very lopsided. It's the financialization of Bitcoin's bad. Nobody's spending Bitcoin. And I don't think it's as dire as people think. I think the market is just evolving. We're learning lessons. And ultimately, especially when it comes to spending Bitcoin, that's an individual decision of every Bitcoiner out there. And so creating the tools and the infrastructure to make it easier to spend, easier to receive, is going to happen at the same time that the Bitcoinization of finance is happening. So in conclusion, I think investing under a Bitcoin standard comes down to a few things. We're going to get back to a focus on building good products that you offer to the market at a rate that allows you to actually produce revenue and profit. You got to do your due diligence. This era of the easy money printer being there so that you can just raise a bunch of funds, throw it at 1,000 things, and hope that a few of them are bangers so that you can return your fund. I think that's leaving as well. From a company's perspective, it's making those same decisions for your own balance sheet and your own finances. If you're going to invest in hiring people, if you're going to invest in research for new products, you have to have this opportunity cost in your mind. Is it worth deploying this capital? Do I think that spending this money to do this thing, to raise this person, is going to produce an amount of revenue and profit above what Bitcoin is doing in terms of its increasing purchasing power? And then, yeah, just doing things, getting out there and supporting the people and the businesses that are beginning to integrate Bitcoin into our everyday lives, whether that's in the traditional financial world with Bitcoin as collateral, or the small business world of people accepting Bitcoin as payment. And so that's it. And I think we have a couple minutes for questions.